Hello and welcome to today's stock market analysis, March 14, 2018, Wednesday. Now we have quite a lot of political uncertainties in the US where Donald Trump is firing Rex Tillerson, and maybe there's another important figure that's going to be fired. And despite so many change of key officials in the US stock market, in the US government, the stock market hasn't dropped a lot. Okay, if something very serious and important happens, usually the market will go down a lot, maybe 1,000 points. So the fact that this official being fired or resigned, or possible change of key officials, and the market doesn't move that much, it just says that all these are just small bumps in the road. And this is the daily chart of the Dow futures. As you can see, we are still in the triangle. Okay, whatever the market does within this triangle is alright, and as it reaches the apex, it is likely to break out or break lower. Okay, yesterday we had a nasty drop of I think about 170, almost 200 points, but we are rallying back up today. Well, I think because the Dow reached a support area, I highlighted this to you some time ago, that this is a descending triangle, and the top here acted as a support for the Dow at this moment. Okay, looking back at the Dow futures, we do not know what it might do. Okay, but if the Dow continues to stay above this uptrend line, even if it drops to here and then it moves back up, it is still bullish bias breakout. And as we all know, triangles usually resolves itself in the direction of the previous trend. The previous trend is up. We take some comfort from the S&P 500 futures, which has already broken out ahead of its own triangle. Okay, so this is the downtrend line, uptrend line is broken up. Yesterday it dropped a bit, okay, but today is rallying back up a bit. Do remember that the apex, let me draw the line, the apex of the triangle is usually a support area. Okay, if you read textbook, technical analysis textbook and stuff, the apex or the middle of the triangle is a support area. So if it drops to here, right, we might find support and bounce up. Okay, and let's take a look at the text. Okay, the tags have actually broken out of above resistance, and this area of resistance, once broken, will usually act as a support. As you can see, it is trying to find support at this area. This thing is slanting a bit. Let me just draw it a bit straight so you can see. Okay, support area, which is why it's bouncing up a bit. Now, if you are a frequent trader, frequent short-term trader, that means you do intraday trading, day trading, or swing trading, sort of 2 or 3 days, right? It's what I normally use is this 5-minute chart, red zone, white zone. Okay, as you can see, when the market was above the white zone most of the time, it was a brilliant time to long stocks for swing tradings, short-term tradings, even intraday here. But yesterday it gap up, but it failed to go higher. It formed a lower high and it went back down below into the red zone. So usually the rule is this: if it's in the red zone, right, you don't want long stocks. Maybe you want to short. Okay, just try not to long, because when it's in the red zone, usually it's not conducive for longs intraday or swings. So at this moment, SPY is still below in the red zone. Now, for those of you who are new, wondering what is the red zone, white zone, it's just a simple 50, below 50 MA of the 5-minute chart is red zone, above is the white zone. So as long as SPY is below, okay, in the red zone, most intraday longs or swing longs will not be working that well. Okay, trust me in this. 75% of the time they won't work that well. This is a simple filter to follow the trend. Okay, so what if you are long here and it goes down into the red zone? Well, you just have to let your trading strategy work out. That is why stop loss is important. Sometimes if you are heavily long, okay, your account is very maxed out for long positions. If you drop into the red zone, you might want to hedge by shorting SPY or QQQ so that the losses in your long positions are offset by the shorts, intraday shorts or swing shorts in the SPY. So sometimes what happens is your trade actually works out in the long run in 3 or 5 days time, but in the interim period of the second day or intraday it goes down, and you know it affects your account. So some kind of hedging or shorting, sometimes it helps to hedge the positions in your long positions. Now let's take a look at the QQQs. It's the same story as well. Actually, it was breaking out of a 15-minute ascending triangle. There's QQQ. Yesterday it spotted the 15-minute ascending triangle. Okay, and it gapped up. But after that, what happened was it failed to move higher. It formed a lower high and it dropped below the 50 MA, and then into the red zone all the way down. Okay, so some traders will short, okay, when it's in the red zone, right? These intraday traders, right? They have their own ways to know whether to short or long. Okay, and my own filter is this: if it's in the white zone, conducive for longs. If it's in the red zone, then try not to long or maybe even short, right? I did a short position yesterday, okay, so intraday, but I closed it already. Okay, let's take a look at the diamonds as well. So same story. Diamonds is much more weaker than the SPY or the QQQ. It didn't even go above the previous day's high here, and of course it formed some kind of a double top in the 5-minute chart and drop below. Okay, so right now let's go back to the Dow. A lot of things hang around the Dow. Okay, a lot of things hang around the Dow. Okay, because it's trying to resolve. There's a big battle going on between the bulls and the bears. Okay, and that's why it's meandering, and this kind of environment causes short-term traders swing trades. Sometimes they don't work that well, so you have to be a bit cautious about it. But if the Dow breaks out above this downtrend line, we might have a smooth run up for a few days. Okay, until then, always remember to look at the big picture, which is the daily chart, and then switch to the hourly chart. Okay, and then last of all, for timing purposes, for intraday timing purposes, always look at the 5-minute chart. Red zone, white zone. Okay, if it's in the white zone, it's conducive for long. If it's in the red zone, okay, you either short intraday or you stay away from long stocks. So thanks for watching. Okay, and do give me a thumbs up if you find this analysis helpful, and do subscribe for more future analysis, and I'll see you in the next one.